Hi, and welcome to another edition of CMS Forex News. I'm Christina Robinson, and today is Wednesday, April 9, 2008. The Bank of Japan policy members met and unanimously voted to hold rates at 0.5%. They will continue their wait-and-see approach to the developments in a possible U.S. recession as well as a global slowdown. A preliminary release on machinery orders, a leading indicator for the manufacturing industry, rose 2.9% year-over-year in March. It's the first improvement this year, as February saw a decline in orders and January showed flat growth. Consumer sentiment in Australia disappointed expectations for a recovery in April. The index put out by the Melbourne Institute decreased 1.3% following March's negative 9.1% reading. Consumers are seeing their purchasing power deteriorate due to inflation. After a few sessions of uptrend, the Aussie-Yen pair was pressured overnight and into New York trading. Following the poor consumer sentiment report, the pair fell 140 pips by 3 p.m. Eastern Time. The yen also got a boost as risk aversion prompted unwinding of carry trades. UK consumer confidence slipped again in March, though it beat expectations of an even further drop. The index fell to 77, its lowest level in 4 years. The annual BRC shop price index slowed in March to 1.1%, though during the last 6 months the retail market has experienced relatively steady inflation, ranging from 1% to 1.3%. In a third release, industrial production in the UK was up 0.3%, with the manufacturing component up 0.4% in February. It was the second month in a row manufacturing was up. A weaker pound may have benefited UK exports and increased demand for manufacturing output. Both figures surprised forecasts on the upside. The sterling has been sliding as the market has been pricing in the Bank of England's rate cut tomorrow. The UK releases were mixed, but they were followed by sterling strength. It took off during New York trading, and by 2:40 p.m. Eastern Time, the pair had climbed from its session low near 1.9650 to trade near 1.9740, a change of nearly 100 pips. After trading a narrow range for much of yesterday and overnight, the Euro-US dollar pair surged in New York trading. By 1 p.m., the pair has rallied 150 pips from its session low and has broken the 1.58 level for the first time this month. The dollar fell within a cent of the all-time low against the euro. As stocks dropped, crude oil surged, and traders increased bets that the Federal Reserve will cut the target lending rate by 0.5 percentage point this month. U.S. stocks were down, and so was the greenback since the surge on April 1st. The U.S. dollar-yen pair has been in a channel not much wider than 100 pips. Today, the pair failed to penetrate resistance and instead fell 100 pips, reaching the support level of 101.50. There was a bout of unwinding during the U.S. trading session. This benefited the Swiss franc and pressured higher yields such as the Aussie and pound. By 3 p.m. Eastern Time, the pound-Swiss franc pair had fallen 200 pips since the U.S. markets opened. Tonight we get more data out of Japan as it releases its current account, a measure of money supply, and another measure of machinery orders. From Australia, we get the country employment report for March. Tomorrow morning we get interest rate decisions from the Bank of England and the European Central Bank. The ECB is expected to hold rates at 4%, while the Bank of England is expected to cut rates by 25 basis points. In North America, Canada will reveal its trade balance, while the U.S. will post its weekly jobless claims. And that's the news for today. Thank you for watching. Join us again tomorrow right here at CMSFX.com.